Yeah, I think if we break through 30, you have sort of almost a lot of hot air between 30 and almost $48. I mean, you could see a very big spike start to set in, and that's typically how silver moves. It never moves in a straight line. It takes forever to make its ascent, or grinds and grinds, and then it just takes off like a rocket.
Mhm.
I think when you get past 30, I think you'll have a lot of potential short covering that comes in. Funds may be, they may be set on the wrong side, or it typically silver always tends to catch somebody off guard. It may be hedgers for producers that are using the futures market to hedge their mining production. Certainly that affected when gold ran in 2008 to 2011. You had a lot of mining companies losing money on their hedge books. So that may be the impetus that happens. But yeah, it's or it could be at least if the market starts to take off, it could also be where people that have leased metal that needs to pay that needs to get that metal back, they may have to pay any price to get that metal back. There could be different types of situations, whether for collateralization, financing, or just simply raw supply and demand.
Mm-hmm. So it almost seems that there's bigger forces on the demand side to create upward pressure rather than that secondary market coming back in to act as the headwind then.
Yeah, the secondary market, I think, will only bring pressure from the premium standpoint. It's not really going to affect the spot price as much, because typically you're dealing more with retail product. You're not dealing with 1,000-ounce silver bars, for example. So unless there's just a massive wave of scrap, a massive wave of retail product that hits the wholesale level then sends it to the refiners to melt for the manufacturing and industry side. Mm-hmm. But I think you're just going to see the premiums get walloped. You may still see people buying metal, of course. The Western Hemisphere investor typically buys when the prices are going up, unlike the Eastern Hemisphere. So nobody could care less at silver at 15, but if silver's at 35, you'll probably have everybody wrapped around the corner. It's just it's human nature. So you'll certainly get buying. It's just the question is, it won't be solely reliant on brand new metal that's coming into the market. I think you'll see that dichotomy or shift that'll bring, and it's well needed, because it'll help relieve some of that premium pressure. It'll allow people to get in at better prices. And it'll probably create a little bit truer market.
Mm-hmm. Yeah, it's interesting to think about the different forces at play there. So you mentioned the 1,000-ounce bar market, and I wanted to kind of get your thoughts there as well of if we actually did start to see some tightness in the market. And I know that we've seen for example, the Sunshine Mint and the US Mint not being able to produce some silver rounds and silver eagles. So, where did we actually see market tightness, and what were some of the symptoms and causes of it?
Well, just recently, the last probably couple of weeks, you've seen a tick up in premiums or the price of 1,000-ounce bars. They've gone up probably about maybe 10 cents an ounce. Not a lot, but it's gone up. There's a little bit of tightness. The EFP is tightening up a little bit. So there shows that there's some tightness in the system. Now, some of that could be simply logistics and production issues, moving those bars from point A to point B. That's typical this time of year. You have holidays, which is a nightmare. You have not just from a congestion of shipping, but you also have vacations. The European market tends to take a week to probably 2 weeks off. So you have just a numerous activities that are going on all at the same time. You have retooling that happens. You have crossover in your production from 2021 to 2022. So you have that delay as they shift production. So there's a number of different things that are going on. Mm-hmm. That has also started to tick up some of the premiums in some of the sovereign coin markets. You've seen the some of the European mints are having issues with blanks and production. There was some social distancing. I think the Austrian Mint and the Royal Mint, I believe, had COVID outbreaks. So you have some social distancing issues that's going on over there, from what I've heard. So that's hampering production big time. The issue is how much product can some of these mints make and ship out during January, because a lot of these wholesalers, as you see, the market start to pick up because prices go down and get people buying on dips. They may have bought a lot of product, and like we saw throughout, the last year and a half, it may be a situation that the mint says, well, you know what, with all the social distancing and all these other issues, we can't make as much product as we thought we were going to make. So that may put some of the industry short metal. And I think that's what possibly could happen in January. And that's another thing to consider, because that could put pressure on, if prices start to rise, because some players may have to go out and buy the metal anywhere they can get it just to cover their transaction.
Mm-hmm. So what about in the 1,000-ounce bar market? Did we ever really see any shortness or tightness there? And what were maybe some of the symptoms of it?
Yeah, you started to see that earlier this year. You saw the FP, the premium go up. You had the record premiums for 1,000-ounce bars that were coming into the market. If I could sum up sort of the first half of the year, and if you ask me, well, why did this silver movement, or why did this retail stranglehold on product and demand die off? I think you could really look at the premiums. The premiums, they always say the cure for high prices is high prices. Well, in this situation, the premiums were so crazy going into May and early June. April, May, June is when they kind of peaked. But the reason for that is that the U.S. Mint was making a crossover into the Type 2 coin. They were changing the series design, so forth. And so you had a complete one whole product, which happened to be the largest product for the market on the retail side, just cut off. So it was a flood into other products. And then the premiums were going up. The dealers were charging absorbent rates. The wholesalers were having to charge higher rates as well. Well, investors just got tired. They didn't see the value in paying a massive price above spot, knowing that they have to overcome that price at some point. So the market started to just simply tail off. And then you started to see the price plateau, and then the premium started to subside. And then, it got just really quiet over the summer. That's pretty much what killed the market. Otherwise, if the premiums weren't as high as they were, I think you would have seen more interest start to expand from the public. It's just, I think people just, I talked to a lot of people back then, and they were like, it just doesn't make any sense paying $7 over spot for a coin that was maybe selling for $2 over spot in the wholesale market.
Mm-hmm. Yeah, of course, there's, that's a huge hurdle for a new investor to the space to get over.
Well, and you got to remember the new investor that was coming into the market, it wasn't your traditional retail metals stacker, I should say. The people that were coming into the market were really first-time buyers. It was people that had your traditional mainstream portfolios, 60%, 70% stocks, 30% bonds, whatever the mix, mix of real estate, but they never really had any type of exposure to precious metals. So, a guy that had $1 million portfolio, he wanted to put, 100,000 into gold or silver. He'd never done that before. Those are the kind of people that came into the market, and they're the ones who ended up paying a lot because they just didn't understand the market. They weren't truly educated in, how to shop around, or they listen to, on YouTube or on Twitter or some other type of forum to try and pick up information. And they heard a guy, they kind of got, okay, that guy makes sense. I'll just buy a metal from him. But that's where a lot of people got trapped. I mean, they were just paying vastly over over spot for product, and so that's where that started to hit the market, and people by the summer just got, they did their first tranche, they bought into it, they really felt comfortable, but then they looked at the price, they looked at how much over spot they paid, and they're like, wait a second, this doesn't make any sense, because now instead of trying to protect my purchasing power, I just gave all my purchasing power to it, to the markup in the product.